while doing our revision for the board exam, it's very much advisable to give priority to the recent additions in the various chapters of the subject. Hi, welcome back to BALAS Accountancy Special Classes. In this episode, I am focusing on such recent additions in the chapter Accounting for Partnership Fundamentals. I repeat, the chapter Accounting for Partnership Fundamentals. 4 number of special sums worked out with comprehensive explanation. That will be there in this episode number BAC 045. Please watch this episode with some extra attention. I repeat, please watch this episode with some extra attention. So, as usual, let me switch gears to my sharing mode of this video. Thank you. Well, students, the first question of this episode. Accounting of Partnership Fundamentals. Questions based on incomplete information. Well, this is the recent trend, and I do appreciate it. This kind of question only really tests your knowledge about a particular chapter. Whether you can apply your mind or how you apply your mind on the chapter. Okay, having mugged up, it will not help you to solve this kind of a sum. Okay. So let us deal with one such sum. It's like this. A and B are partners. As per the terms of agreement, interest is allowed on capitals at 8% per annum and charged on drawings at rate of 10% per annum. A withdrew rupees 10,000 per month at the end of each month, and B withdrew rupees 30,000 at the end of each quarter. You are required to fill up the missing figures in the following accounts. We have been given a P&L appropriation account for the year ended 31st March 2019, followed by capital accounts as on that date. Only 1, 2, 3, 4 informations they are given. Okay. So the solution is this one only. First, let me just show the information whatever is already given here. Interest on capital 40,000. Okay. And B share of profit 70,000. And what is the other information they are given here? The 72,000 they are given on interest on capital. The 72,000 also they are given here. Okay. And the other one being just one entry, a single entry in the capital account by salary 90,000. Okay. So 1, 2, 3, 4 items they are given. And of course, we are getting some information here also. I mean, rate of interest, drawings amount, extra. Rate of interest in respect of capital as well as drawings, and drawings amount also. We can easily find out. So let us grapple it like this. The approach is like this only. I have given a systematic way how to approach so that similar sums you can practice. I'm sure one sum certainly they are going to ask this time. I do predict it. Okay. So please thoroughly listen to this video, fully understand it, and try to work out 1 or 2 similar sums in this way. Well, capital account shows salary credited to partner A. Obviously, the first missing entry in the P&L appropriation account, debit side, represents this one. Show the same in the debit side of P&L appropriation account. This has been given. Okay, I'm changing it to black color. As I go on filling up, I'm changing the color. Okay. So by salary 90,000. Obviously, we will show this one 90,000. Okay, corresponding entry over. So this corresponding entry has been linked here, and you have filled one item. Right. Now, next. Partners' annual drawings can easily be ascertained from the question. Hence, place the same at the debit side of capital accounts. Annual drawings, A 10,000 per month and B 30,000 every quarter. So this also 10,000 into 12, 1,20,000, and similarly 30,000 into 4 quarters, 1,20,000. So both same amount. Okay. Capital account. Debtor to drawings, 1,20,000. And of course, drawings doesn't have a place in the P&L appropriation account. It has only interest on drawings. Sufficient details have been given to obtain the amount of interest on drawings. Calculate the same and place it to the credit side of P&L appropriation account as well as the debit side of partners' respective capital accounts. Let us now calculate the interest on drawings. 1,20,000 each, I already explained to you. Rate has been given as how much? The rate, drawing rate is 10% per annum. Okay. So this 1,20,000 into rate into 5.5 upon 12. In respect of A, it is 5,500. In respect of B, it is 4,500. Now, I need to explain to you why this 5.5 and 4.5 comes. A is at the end of each month. So go for the average period. Time left after first month plus time left after last month divided by 2. That means he has made his first drawing when? April end. April end to next year, March end, how many months? 11 months. And the last drawings, next year, March end. March end to March end, of course, 0. So 11 by 2, 5.5. Okay. So this is explained. Now, next gentleman. First drawing when he has made? End of first quarter. That means June end. April, May, June, not June end. June end to next year, March end, how many months? 9 months. And this 0 as usual. March end next year to March end next year is 0. So 9 by 2, 4.5 months. Okay? Right. So if you work out interest on drawings in respect of A, it will be 5,500 and B 4,500. Let us show it here. Right? Correspondingly, you can show in the capital account also. Interest on drawings, no objection. Okay. Matter is over. Okay. Next. Total interest on capital account has been given in the outer column of the P&L appropriation account as 72,000, while in the inner column of the P&L appropriation account, an amount of rupees 40,000 has been indicated against partner A. Hence, the difference amount of 32,000 is the amount in respect of partner B. Okay. Fill the missing figure. That's all. Is it not? Interest on capital, this has been given and this also has been. Obviously, the difference 32,000 represents interest on capital in respect of B. So this is fully over. And we can show this one correspondingly in the capital account. Okay. By interest on capital 40,000 and 32,000. That's all. Next. It has been given in the P&L appropriation account, B's profit share, that is 1 by 3, rupees 70,000. Since there are only two partners, A and B, the balance share of 2 by 3 share belongs to A. So apparent, no? And the amount is 1,40,000. How? 2:1 ratio, is it not? B 1 by 3 means A has to be 2 by 3. So A is to B ratio is nothing but 2:1 ratio. Okay. This is also over. 70,000 is given. This has to be 1,40,000. So this section is over. 2,10,000. Of course, we can show this correspondingly in the capital account. That's also over. Okay? Right. And as far as P&L appropriation account is concerned, let us balance the account and find whether any difference is there. Okay. Total the heavier side. This is the heavier side. 3,72,000 total. Put the same total across. Okay. And I find there's a balance of 3,62,000. You are well versed by this time. Nothing but net profit brought down. Okay? Or the net profit of the year. 3,62,000. So we have satisfactorily prepared the P&L appropriation account. Okay? Now, here, interest on partners' capital only has been given. Okay? Apply the rate of interest on the interest on capital amount by reverse calculation method and arrive at the capital amount of the respective partners and place each amount respectively at the opening balance of partners' capital account. Well, it is like this. 40,000, 8% rate, 5 lakhs. Okay. This 40,000 and 32,000, you may ask how you have got it. Here already we have done it, na? 40,000 and 32,000, we already explained to you. Yes, that amount only I have taken here. So divide it by the rate of interest. We will get the original capital. That's all. 5 lakhs and 4 lakhs as the opening balance of partners' capital account. Place the same as the opening balance of partners' capital account. Well, that's also over. And the difference is nothing but closing balance of capital. How we have got it? Total the heavier side, 7,70,000. Okay, put the same total across. Yes. Find the difference and fill the difference against balance carried down. Yes. Repeat the process in respect of the other partner also. Simple like that. Okay, total the heavier side, put the same total across and find the difference and show it against balance carried down. That is nothing but closing capital of partners. Well, this is the way we should approach, and if you learn it like this, similar sums you can easily master also. Thank you. Now, next sum. Next sum in respect of accounting of partnership fundamentals. This whole video is I'm limiting only this particular chapter, accounting of partnership fundamentals. Well, the question is like this. A and B are partners sharing profits and losses in 3:1. Following is the balance sheet of M as of 31st March 2015. Liabilities A's capital 90,000, B's capital 30,000. Assets drawings A 12,000, B 6,000, total 18,000. This is the peculiarity of this sum. Drawings have been given within the balance sheet. Okay. And sundry assets 1,02,000. Total of balance sheet 1,20,000. Okay, fine. Profit for the year 31st March 2015, rupees 24,000 was divided between the partners in their profit sharing ratio. But interest on capitals at 5% per annum and drawings at 6% per annum was inadvertently ignored. Give the necessary adjustment entry for the adjustment of interest. Further, interest on drawings may be calculated on average basis for 6 months. Okay, fine. Answer is B's capital account debted to A's capital account. Let me elaborate it. You know, essentially we have to go for opening capital. Why? Because interest on capital is to be calculated. So let us base on the closing capital, 90,000 and 30,000. Is it not? Check it. Yes, a balance sheet prepared at the year end. And so this is the closing capital. We are basing on it. Okay, right. Then profit that has already been distributed, let us deduct. We have to deduct it. Why? Because the closing capital has come after absorbing this profit only. Let us take it back. Let's deduct it. So it's 18,000 and 6,000. How? We are told it is 24,000 and 3:1 ratio. That's all. As simple as like that. Now 72,000 and 24,000. You may ask me, normally the drawings also we adjust. Yes, normally, but here it cannot be because it is not adjusted to the capital. The given closing capital has not come to the picture after adjusting drawings because drawing is yet to be adjusted. That's why it is in the balance sheet. Had it been adjusted, this figure would have been different. So, in your attempt to get the opening capital, never adjust it. Okay, the given closing capital has not undergone the adjustment of drawings. Hence, we are not going to adjust it in our attempt to get the opening capital. Okay, right. Now let us get the interest on capital first. 5% of this one. Take 10%, 7,200, half of it. Similarly, 10%, 2,400, half of it. So, interest on capitals, 3,600 and 1,200. Fine. Interest on drawings at 6% per annum. If you want calculation, it is like this. 12,000 into rate into average 6 by 12. They have been very specific now. Interest on drawings may be calculated on average basis of 6 months. So 360 for A and similarly for B, it will be 180. Okay, drawings amount, of course, you will agree with me, 12,000 and 6,000. Okay, right. Now, what is the net effect of the interest? Interest on capital 3,600 and interest on drawings 360 for this gentleman, here 1,200 and 180. So 3,240 and 1,220 is the net interest amount. Okay. That is a credit to them. Interest has to be credit to the partners. So 3,240 and 1,020, they are eligible for credit. At the same time, this is a loss to the firm. This 4,260, this plus this is the loss to the firm. Is it not? So that has to be borne by whom? Partners only. In which ratio? Same PSR, 3:1. So 4,260 in 3:1 means you'll get 3,195 for A, and for B it is 1,065. It will be debited to them. Okay. This is a calculation, you can check it. It will come like that. Now what is the net effect? Interest being credited, partners will get 3,240 and 1,020 credit respectively. And net loss on account of interest from the point of view of the firm, that is to be borne by the partners, and hence it has to be debited. It will come 3,195 and 1,065. Net effect is that A has got 3,240 debit and 3,195 credit. That means he has to get a net credit of 45. Whereas this gentleman has got 1,065, a debit and a credit of 1,020. That means he will be charged, he will be debited 45. Okay. Hence the journal entry, B's capital debit to A's capital. Debit entry first. Okay. B's capital account debtor 45 to A's capital 45. Adjustment for omission of interest on capitals and drawings. Well, as such, it's a very, very simple sum, but don't make this mistake. Never make these mistakes. That's why I have taken it. Okay. Thank you. So, next question of accounting of partnership fundamentals. From the following balance sheet of A and B, calculate interest on capitals at 5% per annum. That's all. The requirement is very simple. Calculate interest on capitals at 5% per annum for the year ending 31st March 2015. Balance sheet as at 31st March 2015. Liabilities: A's capital 1 lakh, B's capital 80,000, P&L appropriation account 2014-15 40,000. Asset side: fixed assets 1,40,000, current assets 60,000, drawings of B 20,000. Profit during the year 31st March 2015 was rupees 70,000. A and B PSR 2:1. Drawings during the year ended 31st March 2015. A 16,000, B 20,000. Okay. This sum as such is very simple, at least the requirement. Calculate interest on capitals. But there are two places where the students may make mistakes. Hence, I have taken up it. First of all, you see, drawings, only partner B's drawing has been given within the balance sheet. And they have given partner A's information outside the balance sheet. How will you tackle it? Simple like that. We will add back only drawings of A, whatever has been deducted from capital. Whatever is shown within the balance sheet means, what does it mean? It has been not adjusted to the capital. Hence, we should not consider it. I repeat, hence we should not consider it for arriving at the opening capital, because closing capital given here is unaffected by this drawings amount. They are not considered this drawings amount for arriving at this closing capital. Hence, in getting the opening capital, we should not take it up. Okay. So what we will take up only in respect of A. How much is A's drawing? 16,000. That only we have taken here. And as far as share of profit, that is also a little funny. Listen. They say profit during the year was 70,000. Normal case, we would have distributed this one, or we would have adjusted this one in their profit sharing ratio. Is it not? Yes. But here we can't do it like that, because 40,000 appears against P&L appropriation account in the balance sheet liability side. So how this amount strikes you? How should we deal this amount? It simply means that to the extent of 40,000 profit has not been distributed to the partner's capital account. Hence, it is appearing separately within the balance sheet liability side. That point you should not forget. I repeat, to the extent appearing in the liability side against P&L appropriation account profit means it has not been distributed while arriving at this closing capital. Okay, whatever has been distributed only we should adjust. How much has been distributed? 70,000 minus 40,000, 30,000. Hence, that 30,000 we are deducting. As usual, we will deduct only, na? If you are basing on the closing capital, in arriving at the opening capital, whatever profit distributed, we have to deduct. Okay. So 20,000 and 30,000. 40,000 is already appearing. So 70,000 is the profit they are categorically told. So 30,000 has to be only deducted. Okay. These are simple things, but likely to make mistakes. Okay, hence I have taken up. So 1 lakh minus 20,000 is 80,000. 80,000 minus 10,000, 70,000. Again, drawings I have just explained. 60,000 we are adding, 96,000 and 70,000. So we have got the opening capital. Now, simple. Interest on capital 5% per annum. That means 5% of this is 4,800 and this one is 3,500. That is the answer. Very small question, but deceptive one. Hence, I have taken it up. Thank you. Well, students, the last question of this episode. The peculiarity of this sum is that separate payment criteria for a particular partner. Salary plus commission or certain guaranteed share of profit. Well, the question is like this. P, Q, and R are in partnership. P and Q profit sharing ratio in the ratio of 4:3, and R receiving a salary of rupees 20,000 per annum plus a commission of 10% of the profits after charging his salary and commission, or 1/6 of the profit of the firm, whichever is more. Any excess of the latter over the former received by R is under the partnership deed to be borne by P and Q in the ratio of 3:2. The profit for the year ending 31st March 2019 came to rupees 3,85,000 after charging R salary. Divide the profit among the partners. Essentially, we have to prepare a P&L appropriation account. Well, so what is the peculiarity of this sum? What is the special feature? Miss R, the third partner, is not necessarily under profit sharing ratio. He has got two alternatives and the higher amount between these alternatives, he has to be paid. First alternative is a package of salary plus commission. And the second alternative is 1/6 of the profit. Okay. Obviously, when 1/6 of the profit at the share means this original profit will be considered, because the salary and commission as an expenditure doesn't come within the P&L appropriation account. And when he has to be paid under 1/6 PSR, the excess payable over the package. Package consists of salary plus commission, and then the excess amount, whatever is payable. That means when the package is compared with this profit or share of profit, the excess comes, the excess amount, that is to be borne by the old partners in a different ratio, 3:2. So let us grapple with this sum. Okay, be ready. Well, students, let us base on the very original profit of rupees 4,05,000. How did I get it? Simple like that. It has been given profit for the year ending 31st March 2019 came to rupees 3,85,000 after charging our salary, that is rupees 20,000. So if we add back, we'll get the original profit. Why we are doing like this is, Mr. R, the third partner, payment is based on the higher amount between two alternatives. First is a package. A package consists of his salary and a commission. Second is 1/6 of the share. Between this, the higher amount has to be considered. Okay. So we have based on the very original profit. We have reduced the salary 20,000. Now we have got a profit after charging salary, but before commission 3,85,000. Now, what is the commission criteria? Plus a commission of 10% of the profits after charging his salary and commission. Yes. After charging his salary and commission. The profit after charging salary, but before commission. But before commission is 3,85,000. We know such circumstance, what we will do. Before means rate upon 100 plus rate. So 10 upon 110. Okay. So 3,85,000 into 10 upon 110. That works out to be 35,000 will be his commission. The profit after charging salary and after charging commission will be how much? This minus this, 3,50,000. Let's check this commission, whether it takes care of the condition. Yes, 10% of 3,50,000 is 35,000. So the package elements, salary and commission, we have got it. Together it comes how much? 55,000. Yes. Now, the second alternative. R as a partner. Okay. When he receives the package, we will consider him as a manager. And when he is to be given, in case he is to be given, based on 1/6 profit, means we will consider him as a partner. Yes. How much? 4,05,000 into 1/6, that is 67,500. Obviously, this alternative B is the one now relevant. That being the case, it just got an amount of 12,500 over the first alternative. And it has been clearly given in the question that any excess of the latter over the former received by R is under the partnership D to be borne by P and Q in the ratio of a 3:2, a separate ratio. Okay. So that being the case, this 12,500 has to be borne by P and Q in 3:2 respectively. Well, now how will we go about our P&L appropriation account? First itself, bring down the 3,85,000, whatever they have given after salary profit, then add back the salary, get the original profit. Fine. Then what we'll do? this amount, profit after charging salary and after charging commission, 3,50,000, we will distribute to them. Okay? We will distribute in the profit sharing ratio. So 3,50,000, 4/7 for this gentleman and 3/7 for this gentleman. It comes 2 lakhs and 1,50,000. Okay? Now, the matter is not over. Well, if we recover the excess received by R as a partner, this 12,500 from this distribution in the ratio of 3:2 and pay to Mr. R or supplement with this package, then only the package will constitute 1/6 of the share of original profit. Is it clear? So this 12,500, now we are going to recover from him in which ratio? In the given ratio, specifically given ratio, 3:2 ratio, it has to be recovered from them. 12,500 into 3/5 is 7,500 and 12,500 into 2/5 is 5,000. Balance will be P share and Q share respectively. Okay. Now our share will be 67,500. Okay. Obviously, both the sides of P&L appropriation account is now tallied also. Okay. So once again, I would like to explain this one. First itself, we have based on the very original profit. And first salary we are reduced because the package elements we have to find out how much is the package constitute. Salary as far as one of the components of the package, 20,000 clearly given. Commission we have to work out. For that purpose only we are based on the original profit. How the commission? On this amount after charging salary, but before charging commission will base on and rate upon 110 will take because it is commission payable after charging salary and after charging commission. In that case, we know only at this moment before charging commission, but of course after charging salary. So based on that figure and rate upon 110, we got 35,000. If we reduce profit after charging salary and after charging commission, it will be 3,50,000. Of course, we can check it. 10% of this is the commission and the condition has been very well taken care of. Okay. So alternative A is salary 20,000 plus commission 35,000. The amount is 55,000. And alternative B, on 4,05,000, 1/6 amount. That is 67,500. You may ask, why 4,05,000? When he is going to be treated as a partner means the salary and commission expenditure does not come to the picture at all. So we'll base on the original profit and decide his share. That is 67,500. Now we find that this 1/6 share has got a surplus of 12,500 as compared to the 55,000 package. And the agreement is that this will be borne by the old partners in the given ratio of 3:2. Okay. Now let us go back to the account. Okay, we have brought down 3,85,000 as has been given in the question, and we have added back the salary 20,000. Why we added back? Because when it has been found in my working that the alternative B is what relevant, the expenditure, salary or commission must not be booked in P&L appropriation account. So I have got the original profit. We have booked only salary. That's what they told. After charging salary is 3,85,000. That we have added back and we have got the original profit. Okay, original profit what matters. Thereafter, we made a first distribution in their profit sharing ratio. What amount? 3,50,000. How we got? Original profit minus these two expenditure. These two expenditure is now a part of the share of sharing ratio. I mean sharing amount. of the new partner. Okay, that his profit sharing amount comes this plus this 12,500 will constitute his 1/6 share. Okay, clear? So this 3,50,000 we have distributed to them, right? But the difference also has to be given to R. Then only his 1/6 share will be ensured. That's how they'll manage. It has been agreed that in 3:2 ratio, it will be taken off from this distribution. Okay. So 7,500 and 5,000. So P's share will be 1,92,500 and Q's share will be 1,45,000 and R share will be 67,500. And we have got our P&L appropriation account tallied also. I hope I explained to your satisfaction. Okay. Thank you. So, my dear students, I hope this particular video has helped you immensely in your preparation, revision, etc. for the ensuing exam. Okay. Please offer your candid comment in the description box below so that deficiencies I can note and rectify myself. Okay? Further, if you find it worth, please request your classmates as well as your juniors to subscribe to my channel so that I get a lot of motivation in posting more and more videos. Okay? I don't expect to earn even 1 rupee by running this YouTube channel. However, helping students will give me immense satisfaction. Okay, prepare well, give care, and if you find it is worth, run the videos over and over again, master the content, utilize it fully, and go ahead. I wish you all the very best. Take care of yourself. See you